program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's get across what we saw overnight. Global equities rising, reclaiming some of Friday's steep losses, while gold hit another record high. Global sentiment also buoyed after Hamas freed the Israeli hostages from Gaza and Israel freed Palestinian detainees. Now, adding to the risk on sentiment was commentary from the Trump administration, which has softened its stance on an escalation of a US-China trade war. Wall Street's main indices rallied, led by the chip makers, with the Nasdaq notching its biggest one-day gain since May. AI-related tech stocks, they were the biggest winners. Broadcom shares surging after partnering with OpenAI to produce the startup's first in-house AI processors. Nvidia and Micron, they rallied, and Oracle gained after broker upgrades. The big banks also in focus this week, with JP Morgan, Goldman Sachs, Citigroup and Wells Fargo releasing quarterly results tonight to kick off earnings season. And a broad-based rally in commodity prices boosted resource stocks. Precious metal miners, they were the top gainers in London, while US-listed shares of BHP and Rio Tinto gained, reflecting a jump in copper prices. And shares of rare earth miners soared after China expanded its restrictions on exports of critical minerals. Well, US Treasury Secretary Scott Bessent has said that President Trump is on track to meet his Chinese counterpart in South Korea as the two sides work on de-escalating trade frictions that grew late last week. It follows China's announcement that it would dramatically expand its rare earth export controls, which prompted retaliation from the Trump administration, with threats of new tariffs that shocked global markets. Meanwhile, in the Middle East, Hamas has freed the last living Israeli hostages from Gaza under a ceasefire deal, and Israel has sent home Palestinian detainees. President Trump has declared the end of the two-year-long war and later convened a meeting with Muslim and European leaders in Egypt to discuss the future of the Gaza Strip and the possibility of a wider regional peace. Well, the US Treasury market was closed, but futures traded implying the 10-year yield of around 4.05%. Australian three-year government bond yields are close to 3.5%, the 10-year falling to 4.3%. Markets pricing in a 45% chance the RBA cash rate will be cut by 25 basis points at the next meeting on November 4th. US dollar index is up slightly on the day. The Aussie dollar is at 65.2 US cents. Oil prices have risen on the prospect of a meeting between the US and Chinese leaders later this month, with the reignition of trade tensions between the world's top two economies having pushed crude prices to 5-month lows. Crude futures up 5% at $63 a barrel. Copper has surged more than 5%. Iron ore up more than 1% to $108 US a tonne. And gold breaking through the $4,100 an ounce mark for the first time, and silver also rising to an all-time high. And Bitcoin, that's trading just below $116,000. So let's get across those dramatic market moves. Steve Sosnick joining us from Interactive Brokers. Steve, welcome back. So much can happen in the course of a day or two, of course, in this current market. What are your observations, given what we saw on Friday and those dramatic falls, and today's price action?
Good morning, Andrew. There's plenty to unpack. I mean, I think on Friday, the markets were ready. Sort of the trades were getting a little crowded. The market was getting a little complacent. We obviously hadn't had meaningful down days in a while, but it seemed like it was getting a little, some combination of frothy and tired at the same time, which is a paradox when I say that, when it comes out of my mouth. But that was really sort of the feeling I got, was I think people were just buying because it was almost Pavlovian. I made a joke to someone on Friday morning before the news hit, someone asked me why was the market up, and I said because they rang a bell this morning to open trading, so we were higher. And I think that inertia was taking place, but then I think the shock of not only the return of the tariff word, the T word as it were, on top of the fact that just the rhetoric was so negative coming out of the president that we had no choice but to move in the opposite direction, I think. And we'd gotten kind of complacent. I think we'd seen customers shorting up, basically more of a propensity to sell puts than buy puts actually in recent days, at least among more active customers. And I think you hit an air pocket. And today, not going to use the acronym that a lot of people are using regarding one of my favorite Mexican meals, but I think cooler heads prevailed, and I think the president talked us off the ledge a little bit, and so we did get most of the declines back.
Yeah, look, I think we know what you're talking about, but I mean, do you feel as though perhaps markets have seen this before? We get those threats from Donald Trump, and he doesn't follow through.
That's basically what it was. I think, I think this was, I think on Friday, I don't know, he was angry, he was, who knows? But, I think there was a reaction to the quotas on Chinese minerals, which, by the way, that news was more or less ignored by the markets. But I think it was the angry reaction. And then I think you had sort of the flip side of not so, cooler heads, well, we'll talk it out, we'll get things done. And so, if the two of them talk and and they can negotiate something, then that is okay news for the markets, and we move forward with our with our government shutdown, our lack of economic data, and earnings season coming out.
Well, just before we get to that, now of course those AI deals continue. Of course, Steve, the latest one being there with Broadcom, simply adding to that frothiness, I guess, you're seeing in the market.
Yeah, I mean, I said it's like OpenAI completed the trifecta, because now they have Nvidia, AMD, and Broadcom, and as people on their side. It's still a little unclear how this is all going to get paid for. The market took Broadcom up about 10%, basically on the halo of another OpenAI deal, which was less than Oracle's 30% and less than AMD's 40%. But it was still a good deal nonetheless, even though there were basically no details reached. In the last hour or so, I saw a headline basically saying that they're committed to buy billions of dollars of chips from Broadcom. But it continues to raise the question, how are they going to pay for these things? This is a company that in its last report that I've seen had annualized revenues, sorry, not earnings, annualized revenues of about $12 billion. How do you manage those commitments, which are probably somewhere close to a half a billion, a half a trillion, or even as much as a trillion when you throw in all these other companies? It means there's a phenomenal amount of capital that has to be raised, and you do have to wonder what the appetite is to pay for all this. But, buy now, pay later seems to be a thing among a lot of retailers and a lot of financial institutions. And so why not for the stock market as a whole regarding AI and chips?
Now, Steve, precious metals, goodness gracious me, and so it goes. What are you seeing going on in that market at the moment with gold and silver?
This is one of the great momentum trades in quite some time, and this is bearing in mind that the stock market itself is a great momentum trade. I think it started as, I'm going to say, a little bit of a hedge away from the U.S. dollar. Central banks, I think had been moving in that direction since the start of the year. But I think this became, once the momentum hit, it became an important thing. And now we're talking about short squeezes in silver, bars getting on planes. There were also disruptions earlier this year where there were concerns about tariffs in one country or another, and people flying gold from Switzerland to the U.S. or London, and just there's a lot of dislocation. We're seeing, this is turning into a parabolic rise in these metals. Parabolic rises typically mean that number one, that someone is in great pain because you don't see things, it's one thing to go up on a linear manner. It's another thing to go up in an exponential manner. But it also means that they end very unpredictably. I think in general, the mindset has turned toward owning precious metal as a piece of the portfolio. It's something I've always believed in, but then again, my first gig in the business was trading precious metal stocks. And so, in the old days, I could quote you gold mines of Kalgoorlie and New Guinea mining and all these other obscure, stocks from a U.S. point of view, because that was what I did. And then it faded out of favor. And here we find ourselves now with it back in favor. And I think I hate to say this has some room to run because it could end tomorrow, but I do feel that there's sort of a sea change in the way that people are thinking about precious metals and semi-precious metals in a way that I haven't seen in quite some time.
Steve, great to get across all that movement in markets at the moment. Thanks for joining us, some Interactive Brokers.
My pleasure, Andrew.
Let's check in then where we're likely to start in a couple of minutes' time. SPI futures are up 0.3%, reflecting, well, more modestly, I guess, what we saw on global markets overnight with that rebound, particularly on Wall Street after the heavy falls on Friday. We're going to get right across that in just a couple of minutes' time. Stay with us.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.